Welcome, TABB Forum Nation. I'm Anthony Perrotta, head of fixed income at TABB Group. I'm here with Bill Gartland from Interactive Data Corp. And we're going to talk about the elusive term of best execution in fixed income. We know that the regulators are increasingly promoting transparency across fixed income markets, whether it's Dodd-Frank, whether it's MiFID. There's going to be a greater amount of transparency that comes into the bond markets overall, and particularly the credit markets have been a major focus lately. Inevitably, I think once we get greater transparency mandated, and we have certainly your company and others are building tools now that allow for that transparency to flow through the marketplace in a more fluid way, we ultimately might get some best execution, either mandates or requirements, or certainly services built up around that that part of the marketplace. How do you see that progressing, and what have clients been telling you with respect to Best X?
When you come out with a price that is following the credit markets throughout the day, the natural thing that people are asking is, well, how can I use it beyond just for trading? And Best X has been a big part of that for us. There's a strong interest in it, and I think it's in relation to the comments that you made. You know, it's clearly a regulatory focus. It's also just a general governance focus within the firms, you know, to just be watchful of how trading practices are being implemented, and making sure that you're doing, if you're on the buy side, that you are getting the best possible prices for your clients.
What's always been difficult with the Best X equation in fixed income is the construct of the marketplace being a quoted marketplace. A lot of the Best X, I'd say, operational aspects of the best execution, compliance comes after the fact, because you're going out to a number of liquidity providers, you're getting prices, you're trading, and then you're going back to support those prices that you got again. So is that changing at all?
That's changing to some extent. I mean, we're involved in using our prices to provide that. I think others will follow suit. When you have prices that are moving throughout the day and reflecting where the bond market is moving, you can create that kind of flexible baseline against which to measure this particular trade. And when you look at that in the aggregate, when you look at all the trades and break them down by various characteristics, trade size, credit quality, even CUSIP or issuer, you can observe the patterns of how the market tends to trade the bond that you're trading, which give you an opportunity to make measurements that were difficult to make in the past. There, you know, you have that independent measure that can, you know, that from which you can look at the aggregates and really make some decisions about how particular trades were performing, whether they for bonds that trade often during the day or just periodically throughout the week, or even, you know, very rarely.
So unlike the equities market, in fixed income, we don't have a specific mandate around Best X, and some would argue we don't even know what the definition of best execution is. So do you guys think we're moving towards a regulatory mandate, or at least that the market is gravitating towards a more consistent definition about what best execution means?
We've gone down to Washington and over to FINRA and talked about what we're doing, just to make them aware of what might be possible down the road. What action they may take is, you know, beyond me to try to speculate about. What we do know is that the clients are very interested in what we're showing them. You know, from a best practices point of view, from just running your business, if you can't measure it, you can't manage it. I think people are interested in that, you know, and they'll be prepared should and when, you know, more rigorous mandates come from regulators. Certainly in Europe, that seems to be the path that they're on.
Right. So you've said clients a number of times. Obviously, Interactive Data has a wide array of clients that don't necessarily reside just on the buy side of the equation.
No.
So clearly, from an asset manager's perspective, they have a fiduciary obligation now to provide Best X for the funds that they manage and the trades that they do. But on the dealing side of the equation too, there's also some advantages to having Best X, right?
Oh, absolutely. We've been talking with, you know, clients of ours already on the sell side who, you know, they have to contend with, you know, the markup rule in FINRA. You know, the framework that I described earlier actually, you know, helps along those lines too. You know, we break down the trades by trade size. You can see the norms in the market, and you can, you know, they can set limits on, you know, where are they comfortable allowing their transactions to occur, trying to nip in the bud some of the trades that might come up as problems that, you know, in a post-trade world, now I have to resolve a problem. If I can stop that trade from crossing in the first place, if I can lower the price below whatever threshold my firm establishes as an acceptable threshold for the price, you know, or at least demand an immediate, you know, prompt for an immediate rationale from the trader as to why that's the appropriate price to give in the market, you kind of get away from some of the surprises that plague that aspect of the business.
Right. Obviously, electronification creates a lot of efficiency in the marketplace. Right. One of the areas where I think this has helped BestX is in the smaller trade sizes, where firms like MarketAxess allow you to go to a wide array of dealers if you're an asset manager at one time and get a lot of prices back via the RFQ mechanism. So for there, the pre-trade analysis actually is probably sufficient to meet internal compliance needs. But the reality is that we still trade, 70-odd, 75-odd% of notional in larger block trades in the corporate bond market, where you're going out via voice to a limited number of dealers.
Right.
And there's no guarantee that the relationships that you have are the dealers that at that particular time might have the best price in the marketplace. You're just not surveying those other dealers. So where do you think the real value down the road is in sort of like providing either pricing data or pre-trade transparency that would help BestX?
We've talked to risk managers, right? So the people from, the sort of policemen of the trading desk, they want the independence. They want something away from the actual away from where the trading is actually happening. If there is such a source, we and our competitors that are in this space, we can work with, you can extend our process across the expansive trades, right? So it's not just the ones that are done electronically, where as a byproduct of the trade, you get the best data that you need. You can have a consistent view all the way down the spectrum, even when you are trading large blocks over the phone, not having to reveal your intentions or what you've done to others just to document the quality of the trade, as well as for the trades in assets that don't trade all that often, that for whatever reason you've decided it's time to move those bonds out of the portfolio. What are you measuring against? That's where I think the value comes from.
So it sounds like the marketplace would benefit tremendously from best execution across a wide array of market participants, both the dealing side and the investment side of the equation. And there are services now being built up to facilitate maybe a greater definition of what best execution is. I want to thank Bill Gartland from Interactive Data for joining me today. I'm Anthony Perrotta, head of fixed income at TABB Group, and we look forward to seeing you again in the future.